Hey everyone, this is Kirk here again at Option Alpha, and I wanted to do a recap video for this week and kind of go over a couple of things, mainly to answer I guess, the title of this post. And I really think that a top is very, very close. I've said for a while, pretty much all of January, that I think the end of January is going to be a lot worse for the market than I think the first half of January has been. So, we're already through halfway of January, so I think a top is close, and really because I think that sentiment is so overwhelmingly bearish or bullish that it just seems like it's at a point of being contagious now, and myself included. Every day that passed this week, I go, I'm asking myself, should I be in this market now? And I'm really strongly considering, buying this market, and of course that's I'm not really going to buy the market, but I'm just saying that's what I've been thinking over this past week here is, even myself, and I try to keep myself as much away from the market emotionally as possible, but you can't help but keep seeing this market inch higher and higher every day and seemingly with no stop. I think it's one of the longest streaks we've gone in the Dow without having a day of a 1% correction or more, and I believe 70 years. So it's definitely one of a kind what we're in right now. Don't think it'll last. If you do think this will continue on ad nausea forever, then you're sadly mistaken, and you're going to be one of the quote unquote pigs that gets slaughtered, as they say. So what I want to do in this video is go over a couple things. First, I wanted to just have a look at some investors' intelligence charts of bullish and bearish readings of investors in the market. It's a really good way to capture the feeling in the market and see if you're on either the bullish side, a little bit too bullish or too bearish, whatever. Both of these charts here that I have up, I think, are really driving home the point that we're very close to a top. I mean, it's so close, it's incredible. If you look here, here's the percentage of bears in the market, or the percentage of investors that are bearish, and just about 19%. That's way, way down from the September and October highs up around 40s. And you can see here on this chart that this percentage is getting back down in this area that it did back in January and April. And I'll show you on the chart of the S&P and the Dow here why that's such an important level. Same thing on the bullish side. You can see that the reading of percentage of investors that are bullish is upwards of 57%. Now, this is a little bit down from last week, but still really, really high. I mean, overwhelming amount of investors are bullish on the markets right now. And that's fine, but you just have to ask yourself one question, and that's when everyone else has already bought into the market, who's left to continue buying, right? When everyone is bullish, who's left to continue to push the market higher into new territory? The other thing I'm going to just quickly look at here, and I brought up for you, is the investor sentiment survey. This is done by the AAII, and this week's or last week's results for investor sentiment, again, 52% bullish. Neutral is about a quarter, and then bearish is about a quarter. But the bullish reading here again drives home the overall sentiment that we have in the market. You can see that down here, the long-term average is nowhere near this 52%. The long-term average for bullishness is about 40%. So you can see we're definitely too high in sentiment, and things will definitely start turning over. So now you remember on the last chart here, I pointed out these extreme peaks back in January and April, both in the bullish, and the extreme bottoms in January and April on the bearish indicator. So if we go to the chart of the Dow, and we can see, or the S&P here, let me just bring up the S&P, and okay, here's a chart of the SPY, the Spiders Trust, the ETF for the S&P. And what I've highlighted here in blue are those two areas on the sentiment chart where we had extreme levels back historically of bullishness in the market. And you can see both of these areas ended up being areas where the market topped out, and we had some pretty good sell-off afterwards. Now, of course, the January sell-off wasn't as bad as the May-June sell-off, but you can just easily see, if we just kind of look at where we are right now, as far as the length of this rally, we could be looking at a very, very substantial sell-off as we head into January, February, if things don't get drastically better on the economy side. I think that things could really take a beating here. And again, that's probably a lot of people thinking I'm talking crazy, but I think that this is one of the things that people don't expect, and that's exactly why it could happen, right? We all never expected the market to run this far, this fast off of the September lows, and here we are, right? So no one expects the market to continue down into February and March, and that could be exactly what happens. The last thing I want to look at tonight is actually JP Morgan. And I know I don't look at a lot of these individual stocks as much as I should, but JP Morgan had really good earnings today. Had a lot of volume today, 86 million, almost 87 million shares traded. I think what's really interesting about JP Morgan is that the run up before earnings was a lot more profitable than I think that the actual earnings report's going to be. Even though they made, I believe it was like over 40% profit increase, you can see that right now on this chart we have a beautiful textbook looking shooting star pattern, which just signals that JP Morgan's going to be on the downward slide. It's your typical buy the rumor, sell the news type of trade. I think that for a target for JP Morgan is somewhere right above 41. I think that this trend line here that it broke out of, this wedge pattern it broke out of over the last couple months, is going to act as really good support before it continues higher. So I think that JP Morgan's in for some selling as we head into February along with the general markets. Okay, as always, if you have any questions or comments, please email me, and happy trading.